Here's the 30-second lesson on what legends know. Never practice nunchucks in a crowded room. Never eat chole before a road trip. Always take your shirt off before you iron it. Don't take a call near a swimming pool. And don't forget, saving is not investing. Legends don't just save, they invest in mutual funds. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Let me begin by wishing you all a wonderful, wonderful 2025. And you know what? When a new year begins, the people who get the busiest, in fact, and they might have been the busiest, among the busiest, even in the preceding few weeks, last couple of weeks of the previous year, are the finance minister and her team. Because come end January, on 1st of February, they have to present the year's budget. That is the big statement from the government on the state of the economy, besides the financial status of the country. Now, the important thing is that this is while at many levels the economy seems to be doing quite well. There is a general upbeat mood about the country. The markets are a little bit up and down, waiting for Donald Trump, although there's been some recovery. On some larger indicators, there is a lot of concern. So you know that the last quarter's growth rate was very poor. That was a real bummer. There's no other word for it. Now, government is talking it up, saying that this will go up, but let us see where will it go, because RBI has also brought down its growth estimate to 6.6%. Anything below 7 doesn't sound good, but I hope we can keep it to 6.6%. Underlying this, there are some other causes of concern. Those we will talk about today. What we are going to do is, we are going to follow a slightly unusual method, and we'll see if you like it. We might do some of these more often. That I will set it up with basic facts to begin with, basic facts and some interpretation to begin with. Then our domain specialist in this case TCA Sharad Raghavan, he will join in to explain these aspects with specific graphics, and then I will give you some 4 minutes of pure opinion. So on that, I'm making a full disclosure now that in conclusion, there will be 3-4 minutes of opinion. So let's try this format. If you like it, we can do it at least occasionally, if not often. So here are the worrying aspects underneath this growth decline. One, three things are down. Two are quite important. Third is important, but it might be indicative of some issues. The first, that in India, foreign direct investment is down. It is down, and you see the story on your screens. This is by TCA Sharad Raghavan. See the headline? It says it is lower in the first half of this year than ever in the corresponding half since financial year 2013. This is financial year 2025. 2013 means, say, the last financial year of UPA government. That is really not good news. It's really that low. It's fallen that low. So FDI is down. You will then ask me that the ministers, the Government of India, PIB also issued a press release on 12th of December last year saying that FDI is very high. It has reached 1 trillion mark. What does that mean? We will explain it to you as we go ahead. That's why Sharad will be joining us. The second point, the foreign portfolio investments are down. In fact, week after week, on a net basis, foreign portfolio investors have been pulling out the money. Now, okay, this has not led to the markets collapsing simply because there is enough money available domestically. So SIPs are going up, Indian investors are coming in, and they are buying up these stocks. At the same time, FPIs have been pulling out money, which is also not good news and is a matter of concern. The third thing, you might say that is not so important in the big picture. The tourist arrivals to India are down. So if you see the latest Economist, see this article on your screens, it tells us, in fact, it raises a question as to why are you not traveling in India? It's a country with beautiful mountains, the Himalayas, forests, the finest beaches in the world, islands, etc., etc., 43 UNESCO World Heritage Sites, and yet, why are you not traveling in India? That is underpinned on the fact that India's tourist arrivals have been declining year on year after the pandemic. Now, pandemic, of course, there was no tourism, but after the pandemic, globally, there's been a tourism boom. India has missed out on that. In India, in fact, the graph has been declining until 2019. From 2001 to 2019, every year, India's tourist arrivals have been going up. The reason I've included this indicator here is that this might be indicative of some kind of global fatigue in India. So investors are not coming in, whether to invest your businesses, to build businesses here or carry out businesses here, or to buy your stocks, nor are foreigners coming in the same numbers as tourists. So does it indicate some kind of a decline in interest in India? That is the larger concern. Now, before I let Sharad come in, I will also tell you one more fact. When we say FDI is down in India, at the same time you will find headlines from news agencies, some of the publications saying FDI is up. Both are true. Both are true because overall numbers of FDI are up. As you see in this Press Information Bureau press release, see the graphic there. It tells you that India's FDI has actually gone up. That is factually correct. At the same time, what do we mean when we say FDI is down? Because when you do accounting, you have to do credit and debit and then net them off against each other. So as FDI comes in, that is gross FDI. What is net FDI? Net FDI is FDI, one, which is repatriated, that is foreigners who've invested money in the past. They've either disinvested or sold their businesses and taken their money out of India. And the second is outward investment by Indian businesses. You add these two, repatriation and outward repatriation by foreigners and outward investment by Indian businesses, and net that off against gross FDI inflows. So gross FDI inflows going up, the fact is correct. At the same time, net FDI inflows going down is also correct because more money is going out with foreigners pulling out old investments and Indian businesses investing more overseas. Now that we have clarity on this, I have Sharad Raghavan joining us. Sharad, thanks for joining in and good story you've done today. So there is a paradox that the government says FDI is going up. You are saying FDI is actually going down and both are correct.
Absolutely.
I've tried to explain this, but give us the data to explain, to make us understand how this works.
Absolutely. So first, let's look at the net FDI numbers, which is what I'm saying has gone down. It's at a 12-year low. Now, the thing is that this number, it was doing quite well. It had been rising from FY12, that's 2011-12. It reasonably steadily, it had been rising all the way till the pandemic year of 2020-21, where it hit $34 billion. That's the net FDI flows. It's after that there has been a steady decline. It fell to 32.8 the next year, 27.5 by FY23, and then a sharp fall to $15.7 billion in FY24, which is the last financial year. And so far, in the current financial year, in the April to October period, which is the period we have data for, it's at $14.5 billion. And it's important to mention that this comparison is the April to October period of all of these years, so that there's comparability over time.
So it's apples and apples.
Apples and apples.
Not apples and oranges. For each year, the comparison is over a 6-month period. So even the year that he's taking for 2013 is for the same corresponding 6-month period, isn't it?
Yes.
And what was the amount then?
In 2011-12, it was 16.9. In 2012-13, it fell to 13.8. So right now, it's 14.5. So it's barely higher than what it was in 2012-13.
So the lowest since then.
Right.
The lowest since then.
Yes.
So why does the government say it's going up? Because look at this government press release again. They say it's going up. In fact, they also add it all up by saying that they're celebrating the fact that India's total FDI since 2000 in 24 years has gone up to $1 trillion, right? So the government is claiming this. That claim is not wrong.
No, they are also correct. It's just that, as you explained, they're looking at the gross number, which is just the amount of money that's coming in. They are not looking at the amount of money going out. So that number has gone up. And in fact, it's remained at a very high but kind of stagnating level. So let's look at, again, the pandemic year 2020-21. The amount coming in was $48.5 billion, which rose marginally to $48.6 billion the next year. And then it fell for 2 years to about 42.1 by FY24. But again, it's jumped up to 48.6. So you can say over the last 4 or so years, it's been at this elevated level. Because why I say elevated? Because just compare it to, say, FY13, where it was just $17.5 billion. So you can see there's been a quantum jump in the amount coming in, and it's remained at this high level. So the government is correct in saying that more money is coming in.
Why? And then why are you right?
I'm right because the data on the outflows, and now this is the red part of this graphic, which is showing the money that has left the country in terms of disinvestment and repatriation, that has been steadily rising all the way from FY18. So that's 2017-18. This number has been consistently rising. And here we've put it in a minus sign to show that the money is leaving. Now, this number stands currently in the April to October period of this year at $34.1 billion of amount that has left the country. Compare this to 48.6 that came in. That's why the net number is so low, because a lot came in, but a lot has flowed out as well.
And there is also outward investment by Indian businesses.
That as well. So that doesn't technically, the RBI doesn't add that into the net FDI number, but it gives that as a separate heading. And that too has been increasing quite sharply. In fact, this year, in the April to October period of this year.
You are displaying that graphic right now.
Right. Yes. So we're talking now about the FDI of Indian companies investing abroad. So this has jumped in the April to October period of this financial year. It jumped to $12.4 billion from just $8 billion of the same period of last year, and $6.8 billion of the same period of the previous year, which was FY23. So there has been a consistent increase.
Consistent and steep increase.
And steep increase, absolutely. So Indian companies are investing abroad, and this you can juxtapose against all of the talk about private investment within India being kind of tepid, that it's growing, but it's not growing enough. There's not enough. Even the economic survey, the chief economic advisor is calling for more private investment. The FM has spoken about it. Juxtapose that against Indian companies investing more and more abroad, and that gives you a very interesting pattern that's emerging.
Yeah, in fact, the FM said this also in Washington last year. She was sort of upbraiding the foreign investors by saying everything is doing well in India. We've carried out so many reforms, but how come you are not coming and investing? So explain your other graphics also now.
Okay, so then we have foreign portfolio investments, which again is investments not in real assets, but in terms of, by real assets, I mean physical assets like factory, land, buildings, all of that, but investments in securities. That's what foreign portfolio investments are. And now the thing is that this number for several years, I've done this analysis from 2014-15. For most of the years, FPIs have pulled money out of India on a net basis over the year, which means the amount that they've put in minus the amount that they've taken out has been negative more often than not. But recently, and especially post-pandemic, this negative number has been very large. So if you look at 2021-22, they've taken out 2.74 lakh crore. Then it was 1.99 or about 2 lakh crore the next year. And it fell further to 1.44 lakh crore in FY24. But then it's again this year, just in April to December, it has increased to 2.56 lakh crore, the amount that they've taken out.
So it's minus 2.56 trillion rupees.
Yes. So there you've got FPIs taking their money out, you've got net FDI that has fallen to a low. So there seems to be an issue where the attractiveness of India in terms of foreign money coming in, it seems to be losing its sheen. Whether it is something to do with India or whether it is because of the attractiveness of the US, that I will let Shekhar get into. But these are the facts.
Yeah, it's not just the US, but there are other investment magnates also
Right.
now. There's
Absolutely.
Vietnam, there's Indonesia, there is Thailand, and many other countries are also coming into the
Soaking up
reckoning now.
money, yes.
Coming into the reckoning now. By the way, that 2.56 trillion rupees is about, almost exactly in fact, 30 billion US dollars. So it's no small change what FPIs have been pulling out. And it's quite remarkable that our markets have not collapsed. They've in fact been more or less moving in a range. They go up a little bit, go down a little bit. And that should be a matter of concern as well. Sharad, go ahead.
Right. And the final data point that I want you to talk about is our total foreign exchange reserves. These are the dollars and other assets, things like gold, but most of it is dollars that the RBI holds. And now we've just looked at the last year, because just the last year tells you how this number has moved. It started off at $622.5 billion worth of reserves. And this steadily increased all the way till September, where it was $701.2 billion. And this was a high. This was the first time I think that we had crossed $700 billion worth of reserves. But now look what happened in just the next 3 months. Over October, November, and December, almost $60 billion worth of reserves was sold by the RBI. And this was an attempt, even I've done stories on this was an attempt for it to kind of shore up the rupee. The rupee was depreciating. It can't really stop the depreciation, but it can slow it down. It can even it out. And that's what the rupee has been doing. And that's what the RBI has been doing, and it's spent so many dollars. That's almost $60 billion in just 3 months in this attempt.
Well, the important thing is that our foreign exchange reserves by December 2024, that's last month, was almost exactly what it was in April in the same year.
Right.
So instead of rising, our Forex reserves have been steadily rising. Now they've declined, and quite substantially, by almost 10% over a 6-month period. And while Sharad says that RBI has spent some dollars to shore up the rupee or to protect the rupee, or maybe to cushion its fall, because the fall has taken place in any case, but there is also a net effect of all the outflows of foreign money. So if you net off all of the FDI, Indian foreign investments, Indian companies investing overseas, repatriation of FDI, and also pulling out by foreign portfolio investors.
Right.
That also gives you a net negative figure.
Absolutely.
So that also comes in somewhere here.
Absolutely. And all of this, of course, then it puts further, it seems to be a cycle, because then it puts further pressure on the rupee, because if these companies are selling all of their rupees and buying up dollars and taking it out, then again, that's going to put pressure on the rupee. There'll be further depreciation, and then the RBI will end up spending more dollars to stop the rupee depreciation. So it just keeps feeding on itself.
So Sharad, do you think it makes sense for the RBI to keep investing a part of its Forex reserves? They are not spending this money. This money is just converted from dollar to the rupee. So RBI still gets its money. Its net worth is the same, except that some of what it had in convertible currencies is now available to it in rupees. Right. But is it necessary, or is it like holding a strainer in front of a flood? Because currency markets move as they move, as long as they are moving in an orderly manner.
Absolutely. I feel that this seems more an image thing, or a set idea in their head that this is a level of currency that will look good for India. But there doesn't seem to be any real basis behind it, because as you said, the currency markets, they know what the real value is. They can figure these things out. So no amount of manipulation is going to fool them for too long.
That's true, Sharad. And I think I might take it up also in the last part of this episode of Cut the Clutter, when I give you some opinion, as I had threatened in the very beginning. But before I get to opinion, let's also look at this FDI decline on another metric, that is FDI as a percentage of GDP. And there, Sharad, in 2020, it was 2.4% of GDP. In 2021, it crashed. It became 1.4% of GDP. So there are two ways of looking at any data. I keep telling you, one is to look at absolutes, and second, to look at it in relative terms or percentages. Because here, the FDI did not just fall in absolute terms, it also fell, in fact, quite substantially as a percentage of GDP. So what was 2.4% in 2020 became 1.4% in 2021. That's quite remarkable.
Right.
2022 was about the same, 1.5%, and 23 it came to 0.84%. That again, because figures make sense when you see them relatively. In the financial year preceding GFC, that is the global financial crisis in 2008, FDI as a percentage of India's GDP had gone up to 3.6%. So you've now come from 3.6% to 0.84%. And that should be a matter of concern.
Absolutely. Because again, when you relate it to the size of the economy as a percentage of GDP, which is exactly what that metric is telling you, it's showing you whether the FDI is moving in tandem with the size of the economy. So, and this shows that it's not. Our GDP has been growing over this entire period, but FDI has remained quite tepid.
So now if I'm allowed to hold forth with 3 minutes of opinion. So first of all, there can be many reasons for this FDI decline and also the indifference of the foreign portfolio investors. There can be many reasons, but reasons cannot become excuses because India needs both. India needs FDI and FPI and foreign tourists. These days, the reaction seems to be, foreigners don't want to come, to hell with them. We have enough of our own. So if FDI is not coming, Indians can invest. Right? If FPIs are not coming or they are pulling out, Indian investors are there. The number of SIPs is going up, the amount in SIPs is going up. If foreign tourists are not coming, Indian tourists are filling in. That is one argument, but that's a self-defeating argument. This is opinion as I had warned you. That self-defeating argument, how important is FDI? I can do no better than read from the PIB's own press release. This is Government of India's own press release. So if anybody tells you, particularly in the polarized debate on social media, etc., that let foreigners not come in, do we care about FDI? How much is FDI as compared to India's GDP? So while we might regret the fact that FDI has gone down as a percentage of the GDP, in these times of testosterone-driven economic nationalism, many would say, so be it, it's a small percentage of the GDP. Does it really matter? So I will read you this para from Government of India's own press release, which was celebrating India's total FDI crossing the $1 trillion mark in 24 years between the year 2000 and 2024. And I read this para for you. Such growth reflects India's growing appeal as a global investment destination, driven by a proactive policy framework, a dynamic business environment, increasing international competitiveness. Government of India is saying this. FDI has played a transformative role in India's development. Government of India is saying it. FDI has played a transformative role in India's development by providing substantial non-debt financial resources. There is no interest to be paid on FDI. Fostering technology transfers and creating employment opportunities. So toss all of the arguments of economic nationalism, testosterone-laden economic nationalism that you hear, particularly on social media. Government of India itself tells you that they take FDI very, very seriously. That done, we have to ask a question. Can FDI really be going up when domestic private investment is not picking up? If domestic private investment is coming down, FDI will also come down because both are linked to demand. If demand is not growing in the economy, why would anybody invest? So before you ask why the foreigners are not investing, you have to first check if the domestic entrepreneurs are investing. If they are not investing, then both have some reason, and in this case, the reason seems to be the same, which is sluggish demand in India. So foreigners also who've invested in businesses in the past are not getting more demand, so they don't see the pull to bring in more money. At the same time, wherever they can book profits, they have the push to take it out. So that syndrome is working out, and that is what leads to foreign investors also acquiring a trading mentality instead of a long-term commitment. I brought in this money, I made some profit, it's not growing, let me take it out. what is the solution? The solution is India needs more reform. So when the finance minister was in Washington, she said a lot of reform has been done and reform will continue at a higher pace. Again, the PIB tells you that India's ease of doing business has improved. Again, Government of India is telling us through this Press Information Bureau statement that on the World Bank's Ease of Doing Business Index, India was 142 in 2014. When Modi government came in, it is now 63 in 2020. So things have gotten much better. But have they become good enough? Because while India has been improving, India's competitors have also been improving, competitors for this FDI. And that's why what India needs now is another shot of heavy reforms. There is data from TeamLease RegTech which tells us that in India, even now, while much has been reformed, there are still 1563 acts and rules, 69,233 compliances, and 6,618 annual filings. Now, it's not as if every company has to do all of this, but if you have all of these, and various companies in the different businesses end up doing quite a lot of this. This is the large set of rules and laws and regulations and filings. And while ease of doing business for India has improved, there is still a lot to do. At the same time, I think, again, it's opinion, I think that if India really wants to once again revive interest in the country, its economy, and bring investors back, it has to speak the P word again. For a long time, it's not been speaking the P word. P stands for privatization. Modi government, besides selling Air India, which was a remarkable thing because that was a very sensitive company, also very highly visible company. Modi government hasn't sold any companies. Time has now come to look at some public sector banks, particularly something like IDBI, which, Sharad, should be a low-hanging fruit, isn't it?
Absolutely. I mean, there's IDBI, and they've been planning to sell it for a long time, and the banking sector has been doing well. IDBI honestly should be an easy sell.
And a spark like that, some spark like that, could once again get people interested domestically as well as overseas.
Absolutely. It shows intent once again, because that intent has been lacking since the public sector enterprises policy was announced as part of the COVID package in 2020, May 2020. Since then, there was a lot of talk and very little action, and now even the talk has stopped.
And Sharad, will it be right for me to say that making a distinction between FDI and domestic investment is actually of no use, because investors are investors, entrepreneurs are entrepreneurs, whether they are domestic or foreign. So if domestic ones are investing, foreigners will also come and invest. So something has to be done. So domestic ones start investing.
Absolutely right. In the end, an investor is looking on a return on investment. It doesn't matter if they're putting dollars in or whether they're putting rupees in. It's the return.
Yeah. And underlying all of that is demand. So the finance minister's challenge now is to spark demand yet again.
Absolutely.